This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Greetings again from TF Metals Report, and welcome to your podcast highlights for the first week of September 2024. Very busy week. Holiday shortened week, though. The U.S. markets were closed on Monday for our Labor Day observance. But there's a lot of stuff going on here during this first week of September. The manufacturing and service sector PMIs, the latest job openings report, and then, of course, the BLSBS at the end of the week. As the week began, there are a number of things on our radar. You know, if you're going to follow the precious metals, you pretty much got to follow everything. Geopolitics, politics, monetary policy, fiscal policy, the precious metal market, the bond market, the foreign exchange markets, you name it. So we got to keep an eye on the stock market, too. And it was starting to look a little dicey when we reviewed the charts back on Tuesday the 3rd. S&P has a classic-looking double top of a spike up and then a rounded double top. That's not very encouraging. And the chart of NVIDIA looks particularly troubling, with some reversal candles off of lower highs and then another big rounded lower high. NVIDIA goes down, the stock market probably follows it. Or maybe it's the other way around. Either way, we discussed those charts on Monday, September 3. We'll start with the S&P. I mentioned this was a classic-looking double top. Is it ever? What do we know about double tops and double bottoms? You get a spike, either up or down. That's your first top or bottom. And then the thing comes back down, or in this case, goes back up, and you get this rolling second effort. Okay, this is as double toppy as you're going to get. Now, again, maybe not, you know. I mean, plenty of people, myself included, have accurately predicted 10 of the last one bear markets. So, but man, that chart doesn't look so good. And speaking of charts that don't look so good, remember this one from last week? The day NVIDIA was going to announce their earnings, whatever that is, Wednesday last week, whenever it was. They were like, oh boy, this chart looks like crap. Going up, all-time high, full reversal, engulfing candle in the middle of June. Rally backs up in the middle of July. Lower high, full reversal, engulfing candle, blows all the way down, bounces from about where you'd expect, down here around 90, back on August the 5th with all the dollar-yen stuff and everything else. But now look at this rollover. That's where we left it last Wednesday. Well, look at what's happened since. Shit, we should all just been buying puts. It's gone from 125 last Wednesday to 108 today. Where is this going next? Well, if it takes out those lows, I mean, again, maybe it will, maybe it won't, but this looks bad. If it takes out those lows from early August, I mean, we're talking 75? Where's the S&P going to be if NVIDIA goes to 75? Our midweek conversation this week was with our old friend Jim Willie, the Golden Jackass. Known Jim for about a dozen years. It's always fun when he stops by. He's got his unique, somewhat eccentric, you might say, way of looking at things. But I know everybody at TFMR really enjoys hearing from him. It's, of course, a public thread. All midweek conversations are public threads. So if you want to hear the whole thing, I encourage you to go to tfmetalsreport.com, scroll down the homepage, click on the link, give it a listen. It's free to everybody. In the meantime, here's just a very small snippet of what Jim had to share with us back on Wednesday the 4th.
There's a really interesting thing going on. You probably know more about this than I do, but I think there's a lot of arbitrage trade of buying gold and selling silver. And we saw this very evident in April, May, June, where they took down a little bit of profit in gold and it went into silver and we zipped up to 33. And we're seeing it again during the August weeks with the Japanese-centered crisis that Wall Street caused. They were buying gold as a refuge for a financial crisis and selling silver for the economic decline. And, you know, we're using all this false economic data from the United States government to justify the background for 150 basis point rate cut. The biggest beneficiary of Fed actions will be a rise in the gold price.
September is typically, or at least as of late, has not been a good month for gold. Last 5 Septembers, the average down move is about 3%. So yours truly has kind of been warning everybody, whether it's through my articles at Sprott Money or here at TF Metals Report. I'm kind of standing down for a while. I'm going to wait for a more discernible trend. I'm not looking to make any trades, at least certainly not on the long side, until we see how things shake out here in September. So as we look at that, maybe there's some dips to buy. One of the things we discussed in our podcast of Thursday the 5th was maybe taking a look at Agnico Eagle. This is my favorite large producer, lowest cost large producer, that's for sure. Stock's clearly in an uptrend with higher highs and higher lows. But maybe if we can get a pullback, we might get an entry point. Now, with the jobs report coming up on Friday, who knew there was going to be a pullback or not? But this is something to watch in the weeks ahead. Maybe there's a chance to add to your portfolio with a big stock like AEM. We'll just have to see. Finally, I thought I'd give you AEM. Again, low by far, hands down, the lowest cost producer of the majors. There's a reason why it's up 60 some odd percent from its lows, right? Again, great looking uptrend here. Higher highs, higher lows, looks great. But again, 3 red candles this week. Failing to get back above its 20-day moving average this week. Now, this could all turn tomorrow. It could close north of 80 tomorrow on a big rally in gold, and that'd be fine. Okay, great. But if you'd like to buy some AEM, if you think it's going even higher, then what you want is a pullback to where? See this trend line? See the green line, the 50-day? See how it kind of hovered around a 50-day in June, but came down and tapped it perfectly back on August the 5th. You get a dip. Say this doesn't go well tomorrow, and all of a sudden everybody starts figuring out again it's only going to be 25 and all this stuff, and into next week with the CPI or whatever, we get a dip down somewhere in this 50-day and this 75, 76. I mean, this chart would suggest that's a great entry point. So I don't know, maybe you should be rooting for that. Friday, September 6th brought the latest edition of the BLSBS, the August non-farm payrolls report, the job market update that seems to drive all sorts of volatility on the first Friday of every month. Today, no different. Gold immediately reacted positively with the dollar going down due to the poor report, below expectations, downward revisions, of course, to both June and July. But then the dollar began to rally, and gold, of course, started going back down and actually finished down on the day, wiping out gains from earlier this week and posting a slightly, barely red candle for the weekly chart. As you can see on this weekly chart, gold's in another little consolidation phase. After a 4-year consolidation phase and breakout above $2,000, it then took 3 months in a little handle, if you would, between December and February before breaking out and rallying 20%. It then took another 3 months between April and the end of July, trading sideways between 2,300 and 2,450 before breaking out again back in August. We're now consolidating those gains and waiting to move forward again. Will it come with the FOMC meeting in a couple of weeks? Will it come as markets begin to tighten up, maybe melt down in their usual autumn swoon? Well, we'll see. Let's not forget, gold's up about 25% year to date, and that ain't too shabby. So all the volatility of Friday, September the 6th, just remember, we're still doing very well. And days like this are just simply washing out some of the speculators, giving them room to come back in the next time we have some good news for gold and bring higher prices. Hopefully you enjoy these weekly podcast summaries, a daily podcast, just part of what you get as a member at TF Metals Report. I encourage you to check us out. It's only $15 a month. Best online community of precious metals investors anywhere. I think you'll enjoy being a part of it. We hope to see you there again. TFMetalsReport.com. Have a great weekend, everyone.